Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 7th, 2026, and we're diving into UniFirst's latest earnings report for the first quarter of fiscal 2026. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss UniFirst's performance and strategic direction.
Revenue and profitability overview. Let's start with the top line. UniFirst reported a consolidated revenue of $621.3 million for Q1 2026, marking a 2.7% increase from the previous year. John, what are the key drivers behind this growth?
The growth is primarily driven by organic expansion in their core Uniform and Facility Service Solutions segment, which saw a 2.4% increase in revenues. This reflects new customer acquisitions and improved retention rates, showcasing the strength of UniFirst's service-driven model.
Despite the revenue growth, net income decreased to $34.4 million and EPS fell to 1.89. What factors contributed to this decline?
The decline in net income and EPS is largely due to planned investments in growth and digital transformation initiatives, which impacted operating margins. The operating margin dropped to 7.3% from 9.2% in the prior year, reflecting these strategic expenditures.
Segment performance and strategic investments. Let's delve into the segment performance. The Uniform and Facility Service Solutions segment reported revenues of $565.9 million. How did strategic investments affect this segment?
The segment's operating margin decreased to 7.4% from 8.8% last year, primarily due to investments in growth and digital transformation. These investments are crucial for long-term scalability and efficiency, despite their short-term impact on margins.
The First Aid and Safety Solutions segment saw a significant revenue increase of 15.3%. What drove this growth?
This growth is attributed to the company's investments in its first aid van business, which have started to yield positive results, enhancing both revenue and profitability in this segment.
Balance sheet and capital allocation. Turning to the balance sheet, UniFirst reported cash and cash equivalents of $129.5 million with no long-term debt. How does this position the company for future growth?
UniFirst's strong cash position and lack of long-term debt provides significant financial flexibility. This allows the company to continue investing in growth initiatives and returning capital to shareholders through share repurchases and dividends.
Speaking of shareholder returns, UniFirst repurchased 31.7 million of its common stock and declared a quarterly dividend of 3.65 per share. What does this indicate about their capital allocation strategy?
These actions highlight UniFirst's commitment to returning value to shareholders. The share repurchase and dividend increase, marking the 8th consecutive year of dividend growth, reflect confidence in their long-term financial health and strategic direction.
Future outlook and guidance. Looking ahead, UniFirst reaffirmed its full-year fiscal 2026 guidance with revenue projections between $2.475 billion and $2.495 billion. What are the key factors influencing this outlook?
The guidance reflects continued investments in their key initiative, expected to cost $7.0 million this fiscal year. These investments are aimed at enhancing growth, scalability, and operational efficiency, positioning UniFirst for improved profitability in the future.
They also provided an EPS guidance range of $6.58 to $6.98. How does this align with their strategic goals?
This EPS guidance aligns with their strategy of balancing growth investments with shareholder returns. While near-term margins are impacted, the long-term outlook remains positive, supported by their strong balance sheet and cash flow generation.
Key takeaways. In summary, UniFirst's Q1 2026 results reflect a strategic focus on growth and operational efficiency, with revenue increasing by 2.7% to $621.3 million. Despite a short-term impact on margins, the company is well positioned for future profitability. John, any final thoughts?
UniFirst's commitment to strategic investments and shareholder returns is commendable. While the near-term earnings decline is notable, their strong balance sheet and growth initiatives suggest a promising outlook.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on UniFirst performance in the comments below.